Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P 500 followed by the Nasdaq100 and the DowJones30 future chart. Very interesting video ahead today. I think many of my viewers will actually learn something new. The markets are quite problematic at this moment in time, and this is due to the fact we have the 10 to 2 year bond spread that is fastly uninverting. What do I mean by that? Well, history will tell you that whenever the spread between the 10 and the 2 year drops into negative territory, so below this white line, it's then called a inverted yield curve, and that historically historically forecasts a recession to occur within 32 to 36 months time. So that's the first warning light. But what happens is that when you get the bond spreads starting to uninvert, so that's what's happened significantly since the start of the month of August. We've had this 2 to 10 year spread start to uninvert rather rapidly, especially in the past couple of days, and that is a big alarm for a recession, meaning it could be here any month now. And I think that what many investors are now doing is paying very close attention to the employment data. If we start to see the unemployment figures now start to go higher, that will concern many investors, and as a result of that, we have seen some volatility in the markets. But I want you to all understand that what we're actually seeing here isn't as bad as what many think. Obviously, we have the 2 year bond and we have the 10 year bond, and the reason as to why a uninverted yield curve does really start to scare investors is because history will tell you that when you have had that inverted yield curve, you've had the 2 year bond that has then dropped significantly, and that's due to the fact the Fed has come out and cut rates. And that might be because a recession or bad data, where right now that isn't the case. In fact, it's actually the other way around. The reason that we are now seeing an uninverted yield curve is because we actually have the 10 year bond that has rallied significantly, whilst the 2 year has stayed stable just above 5%. So, here you can see clearly over the past couple of weeks, we've seen this 10 year excel from 4.4% all the way up to, during yesterday's trading session, up at 4.88%. So we nearly saw the uninverted yield curve during yesterday's session. I think that we are probably still a few weeks away, but it does look very likely that it's going to happen. But it's for a good reason. We are seeing the 10 year spike up rather than the 2 year collapse, and that should be noted. But let's just quickly get into a technical analysis here of the S&P 500. The S&P 500 rallied very nicely during yesterday's trading session. We respected the 200-day moving average. We've now found resistance back up here at the 200-day EMA. What I would like to see is a break above the 200-day EMA. That then opens up the gates to the 18th of August lows, which sit at around 4,335. For me to become extremely bullish here, I want to see a daily close above 4,335, which were the lows back on August 18th. Once that's in place, then I'm very confident that we can then go and target the swing highs. Moving over here to the Nasdaq100, we still continue to respect this uptrend line. We have plenty of support just below us with the 0.61 fib area from that peak to trough decline from 2022's bear market. Below that, we also have the 200-day EMA and, of course, the 200-day moving average. So in terms of support below us here for the Nasdaq100, we have lots of it, and I do expect this market to break back above the 50-day EMA, so back above 15,000, and then that then brings the swing highs of this year, which sit at around just shy of 16,000, back into play. Finally, moving over to the DowJones30, the Dow, from a technical perspective, we have broken down rather significantly here, but we have found support at the 0.5 fib area from the 2022 bear market peak to trough fib chart that I've drawn. With that being the case, I do believe that it's only a matter of time now until we do see some buyers step back into this market and then, go and target the 200-day moving average. There's going to be lots of volatility over the next couple of days, especially with regards to other assets like oil here, for example. Oil has fallen off a cliff this week from, $95 a barrel all the way down to 83. I think at one point it did drop as low as $82 a barrel. Many investors are going to continue to monitor these markets. I think that the next area of support here for oil would be down at 80, so that I think will benefit the stock market with the fall in oil. We've also got the dollar. I think that the market extortion signs have now come up here for the dollar, and I do believe that we will start to see some stabilization in this market where we perhaps go and drop back below 105. And of course, for 10 year, I think that this is going to cool off despite the fact that we have uninverted. But definitely keep an eye on the 10 to 2 year spread, because the more that this uninverts, the more fearful investors will come. But I want you to all hold in your minds that it's actually a very good reason as to why it is uninverting. It's not the 2-year falling because of the Fed are coming out cutting interest rates because bad things are happening in the economy. It's more because of a 10-year bond is rallying and the 2-year is actually stabilizing. That's going to wrap it up for today's video, guys. I hope that you enjoyed today's video, and I would just like to share this barcode with you. If you'd like to join my trading signal group and follow my day-to-day trading signals, as well as receive my daily market research prior to US markets opening to help you guys navigate through these volatile markets, then make sure you scan this QR code on your screen. It will take you to my website. You can sign up. It takes 10 seconds. It's completely free of charge for your first month. And if you don't enjoy the service, you can cancel at any time for completely free of charge. Thank you very much for watching today's video, and I look forward to welcoming you all over on Telegram.